So thank you very much for inviting me to speak at your conference. There we go. Let me begin by saying that mining impacts the surroundings, but it's not dissimilar to other industries, and it's not dissimilar to other enterprises, and certainly not dissimilar to other human engagements and activities. Mining is instrumental and required in our economy. And so while one can protest one thing or another, we could not live the lives that we lead, the lives that we have, without taking minerals and metals from the ground. We need extractive industries. And as we go through the green energy transition, that will become even more apparent. So the question is, and you've heard the question before, there is an answer to it, is not do we have mining, but how do we mine responsibly? Responsible and robust environmental and social and governance policies and practices is essential to today's mining industry. They are the table stakes that we have to consider, and without them, a mining company will not only not earn the privilege to operate, but it will also not get the respect and tolerance, in my view, of the investment community. And this is the fair and correct approach to take. You should be responsible for local environment. You should be responsible for the health and safety of people with whom you associate and who work for you or with you. And you should be responsible in the present world with what's happening more globally with the environment. ESG broadly is defined as health, safety, local environmental adherence, community engagement, the development of sustainable communities. More generally, it's ethical business practices. And it also captures today, as I mentioned, what's happening with climate change and what's happening with climate. Now, considering the brevity of this presentation and the primary importance of health and safety and environmental protection, I'll focus on those tenets, although certainly touch on some others as well. But how do they fit into the corporate goals of a company, operational improvements, optimizations, as well as increasingly the importance in M&A? And the adherence to ESG best practices encourages and supports, in my view, better operations, value creation, and profitability. And so you began by talking about the interesting times and our corporate transactions. We could not have found ourselves in the position where there was a bidding party prepared to pay a 40% premium for our company. And we could not then have had two more other parties say, we will come in as interlopers in a friendly deal and bid 15% more to that. Unless we were demonstrating that we could show value creation, profitability, and in my view, that could not have happened without what we've been doing certainly over the course of the last 5 or 6 years, which is more strictly following a protocol that helps support health and safety, a protocol that encourages environmental adherence, community engagement and sustainability, and the like. A little bit on the company, just for those of you who are not familiar. I founded the company in 2003, and the goal was delivering sustainable growth and value to shareholders, but stakeholders more broadly. I believe that as a result of that, I have a unique insight into the importance of ESG, how it interacts with corporate goals, operational excellence, and, for that matter, mergers and acquisitions. I will say that none of that comes easy. I'm not suggesting to you that everything has been perfect. You learn from your mistakes. And in making those mistakes, you then determine what is the better course of conduct. And that better course of conduct, our conclusion has been over the last 19 years in running, and since this company has been in existence, is that the more you adhere to health, safety, environmental adherence, community engagement, the more feedback you get back from people who work with you, the more support you get from those people, and the more likely it is that you'll be getting more value and more profitability. So who's Yamana Gold? We're a diversified precious metals producer with 5 operating mines, a number of development-ready projects, exploration properties, and land positions throughout the Americas, most notably in Canada, Brazil, Chile, and Argentina. We operate in countries that have history, pedigree for mining, established mining laws. There is mining friendliness, but more important than that, it's rules-based. So in other words, we know what we have to do for the purposes of getting an exploration permit all the way through to a mining license. On a gold equivalent basis, we produce 1 million ounces, mostly gold, but with a significant, roughly 13 to 15% of our revenue comes from silver. We also have a significant copper content in the company with our Marrone project in Argentina that is not yet at the development stage, coming very close to development, but Marrone will be a significant copper producer as well. Over the course of the last several years, we've engaged in a program of getting growth that is organic growth. We're blessed with an abundance of world-class and generational assets. These are low-cost assets, and the implementation of the growth that you see here comes at low cost as well. We've called it the Yamana 1.5 plan. It's a plan to get to 1.5 million ounces from the current million ounces, so full 50% growth in production, and that comes with incremental capital. It is not a significant amount of capital that gets us to that production platform. Our existing asset base and project pipeline can carry us to more than that, and that's part of what made this a very interesting situation for potential bidders of our company. It is not just the 1.5 million ounces. We have line of sight to get to 1.8 million ounces, but as you see in this bar graph, the assets in the company, the portfolio that we have, can actually carry the production platform to an equivalency of closer to 3 million ounces. Our Marrone project alone, admittedly a copper project with some gold, our 56.25% of that would generate more than 313 million pounds of copper production. I apologize to those in the audience who look at it in tons. I prefer to look at it in pounds, but 313 million pounds of copper is the equivalent of 750,000 ounces of gold. And so you can see that the production platform of this company can comfortably get to that 3 million ounces to which I just referred. And so while we have this growth in the company and while we have this inherent value, the conclusion that our board reached after many years of evaluation, looking at many things, the value creation opportunities, quality of portfolio, quality of assets always counts, but critical mass and size counts more today than it has in the past. And so after a significant process that we engaged in, we came to the conclusion that market price was not reflecting that full value that I've just alluded to. And so in early 2020, our board mandated management to look at what are the alternatives. And after that robust process where we've looked at things to buy, where we could create business combinations with mergers of equals, and if we were to sell, who would be the logical buyers and for what, we came to the conclusion that the best course for us was to become part of something larger, and that led to a first transaction that we announced in late May with a company called Goldfields, and that transaction then led to an interloper, which is that superior proposal that Agnico, Eagle, and Pan American put forward to our board of directors by early November, which we accepted as a superior proposal. We're now engaged in that transaction. So with the initial deal, with a 40% plus premium for our company, this transaction provides an additional 15% on top of the implied price of the first deal. A little bit on that business combination before going into some of the ESG issues that I'd like to discuss. The result of this transaction is that there will be a business combination between Yamana and Pan American. The Canadian assets in Yamana, most notably Canadian Malartic, will be sold to Agnico Eagle. Agnico will come up with $1.5 billion of its stock and $1 billion in cash. And Pan American comes up with the remaining roughly $2.5 billion of stock. The result of all of that is that Agnico consolidates the ownership of Canadian Malartic with our 50% and their 50%. The result of that, of course, is that they will own, we as shareholders of that company will have ownership of two of the largest precious metals mines in the world, certainly within the top 10, and amongst the largest, certainly the largest in Canada. With 80% of the production on a production profile of 3.6 to 4 million ounces that comes from Canada. So I call that the maple syrup side of the transaction. The salsa side of the transaction is a bit of the spicier part, a little bit more of the torque part, is the Pan American Yamana merger. That creates a company with 1.4 million ounces of production between gold and silver, 12 mines, all in the Americas, between Central America, Mexico South, and into South America. And we've agreed to the integration of managements and board of directors so that we can maintain continuity, we can maintain corporate knowledge, mitigate risk, and best practices, interestingly, when it comes to ESG matters. A special meeting is called for January the 31st, and we expect to close sometime in the first quarter of next year. Let's get into some of the ESG issues that relate to this. Now, ESG has intensified over the last several years, but most mining companies have honed their ESG policies and practices, frankly, for more than a generation. This is not something that is new. The climate action side of it is something that is new and laudable that investors have said this is something that we should be focusing on. But the rest of it, local community, local adherence to environment, health and safety, these are things that have been honed practices and skill that go back at least a generation and probably longer. We've put numerous policies and programs in place to understand and mitigate the social and environmental impacts. We have created key performance indicators that are tailored to measuring our performance on health, safety, sustainable development, and community goals. And all of this is done fundamentally, as I mentioned a few moments ago, to improve the business. Not just because it's the right thing to do, but it is the right thing to do. So it gives us maintenance of a strong social license, and frankly, it goes hand in glove with profitability, as I will describe in a few moments. We've also now formed a climate action strategy. That climate action strategy has two targets. The first is a 1.5 degrees Celsius aligned, science-based greenhouse gas emissions abatement target compared to pre-industrial levels by 2030. And the second is an aspirational goal of net zero greenhouse gas targets by 2050. And already this year, we're on track to produce more than 85% of our gold ounces, our precious metals ounces, using renewable energy. Wind turbines, interestingly. Wind turbines at one of our mines, our Cerro Moro mine in Argentina, converting to wind turbines for only 50% of the power, which will not be difficult for a small mine that generates 160,000 ounces per year, but with a tonnage, a throughput of only 1,000 tons to 1,200 tons per day. Converting from diesel to that alone reduces our greenhouse gas emissions. Where we meet the target by 2030, we meet it almost imminently. And we're already progressing studies and then the implementation of those wind turbines. 20% of executive management, and that number has been going up over the last several years, is based on matters and key performance indicators that are directly linked to ESG performance. And given the focus on ESG, I'm very pleased to highlight that we recently received updated performance ratings from 3 of the major ESG research and ratings organizations, with ratings improvements across the board. So in 2022, this year, the S&P Corporate Sustainability Assessment Score increased, our MSCI ratings improved, Sustainalytics scores improved, and we were already scoring well by comparison to peers, and now we're scoring even better. We are ranked amongst the top corporate citizens in Canada by Corporate Knights, Canada's 50 best corporate citizens. Now, this makes us resilient. It allows for us to better recognize and reflect on opportunities, and it gives us our social license to operate, and it promotes trust. And as you are aware in your own business dealings, the more trust there is amongst the participants, the more likely there is that there is camaraderie, union, sharing of ideas, and that's ultimately what creates value. The health and safety of our employees is paramount, as I mentioned a few moments ago. We emphasize health and safety in our company. And interestingly, whereas some companies cover only their employees, we cover in our statistics and in our views, we make sure that the practices of our contractors are consistent with ours when it comes to safety matters. And this focus on health and safety, whether measured as trailing indicators such as lost time injury rates or total recoverable incident rates, or leading indicators, help us build the desired culture in our company that has resulted in a demonstrably positive trend across all measures. Now, one more thing that I'll mention to you in terms of creating culture, perhaps more on the governance side. We created a construct in our company. You properly said I'm the executive chairman of this company. I was reading an article in one of the publications of should more companies go to the role of chief executive and executive chairman. I think, frankly, they should. It has to be fit for purpose. But in our company, the executive chairman role is a direct link to the ESG matters in a company, a direct link, of course, to matters relating to strategy, but ESG matters as well. So when we have a tailings director in our company, that tailings director does report through a senior vice president of health, safety, environment, and community matters, who reports to a chief executive, but he has an indirect report to me as well. And that's important in our company because it allows us to be able to promote the culture that these things are important, that it is not just about the number of ounces that we mine, it's how we mine them. Our vision in our workplace is to have zero workplace incidents. Now, these are industrial enterprises, and so there is bound to be something that happens. Clearly, we should be taking all steps to avoid that. But we aim towards zero workplace incidents. Those are the guides for our health and safety strategy. And we are very favorably positioned versus our peers as measured on total recordable injury rates. And we have operated, I'm very happy to say, without fatality for the last 5 years. Our focus on health and safety manifests itself then, as I said a few moments ago, in terms of how we perform. I do not believe it is coincident. It is causal that we've gone from this health and safety record to production and cost performance in our operations that has met every goal that we've set, every guidance that we've given over the course of the last several years, including this year. We are on track to meet our production and cost guidance this year, and we see meaningful growth across the business, exciting exploration results, organic growth in mineral reserves and mineral resources. We're delivering on our project pipeline, and we're delivering on it efficiently and effectively. I'm running out of time. I hope you'll give me a little bit more time. But I want to give you an anecdote. It is one of our mines, our Jacobina mine. Jacobina in 2014 was producing 78,000 ounces per year. We were struggling to make that operation work. Its costs were $1,500 to $1,600 per ounce, and it had a terrible health and safety record. And singularly, everyone on the investment side said, why don't you sell it? Because it is not core. But we saw something in it. How to refresh the health and safety side, improve the way that we deal with local community, improve the way that we deal with environment, and the way that we deal with our tailings storage facilities. The result of all of that is that that mine now produces not 78,000 ounces per year, but 230,000 ounces per year, with line of sight to get to 350,000 ounces, more than 20 years of mine life, all-in sustaining costs of $760 per ounce. And that is true for many of our other operations as well. So our performance then does drive on ESG matters, does drive performance on other matters as well. Just very quickly on the governance side, we've also refreshed our board of directors, and we've brought onto our board of directors diversification, not just in terms of gender, but also in terms of our ability to manage more effectively on ESG matters. Interestingly, on the gender side, though, 3 of the 7 independent directors, or 43%, I don't know how you get 43% of a human being, but 43% is the number, is women. And 3/4 of the board has familiarity and experience with ESG-related matters. So bringing all of this together then, there are a number of different factors that have brought us to where we are. We highlight one of the performance measures here, which is our greenhouse gas emissions, and our climate strategy based on the latest public information, using 2019 as a reference point. We're almost 60% lower than we were in 2019, and we continue to improve. So coincident with the focus on ESG excellence, the value of Yamana shares in that same period of time, so we've increased production, we've improved costs, we've improved our inventory of ounces in the ground, we've developed a plan for growth to 1.5 million ounces or more, and our share price has grown by a full 54% over the past 3 years versus the price of gold, which has increased only 20% in that period, and the ETF, which has gone up only 7%. So ESG does make a difference to the performance of the company. As I've run out of time, let me go to the conclusion. It does make a difference in the performance of a company. It does make a difference in terms of how a company is viewed by others in the industry. If we look at, don't think the slide shows here, but one of the factors that was looked at with these corporate purchasers is that in taking the action in buying our company, they actually improve their greenhouse gas emissions. And they go from being 16th percentile to 7th percentile as a result of our low greenhouse gas emissions. So the impact of ESG is growing as a factor to look at on target selection, company valuation, and deal assessment. It is a tool for identifying mitigation of risk. It is a tool for the creation of value. Increasingly, it is becoming and should become part of company culture to define future growth prospects and that social license to operate. And coming back to what we started with, which is this corporate transaction, both Agnico and Pan American identified Yamana's ESG first operating model and low carbon footprint as one of the factors for consideration for a corporate purchase. And we share a culture of looking at quality, health, safety, environment, and community and environmental matters. And I'm very happy to say that part of that then translates itself into an agreement that we will integrate our managements so that we can look forward to a combined company that shares best practices. With that, thank you very much, ladies and gentlemen. Do we have time for questions?